General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock the workout. So just finished it up. It's Thursday, 28th. Today is definitely manipulation. No real news until next week for Friday. It was an engaged day. Confidence was medium. Conditions confirmed. And we've seen the price delivery signatures. Time theory. Anchor point is not confirmed. Just how the week is looking. It's kind of seek and destroy. Expansion is playing out, and no terminus was hit today. We didn't hit no new areas of price. So let's do the NASDAQ. Crazy, we had a nice push down for Asia. Reacted. Was this fair value for buying? Crazy. Buy that EQ, created an order block. Use this for the buy. It was a nice fake out too. I thought maybe we return here. But after you flip, it's like, yeah. Get the hour chart. Interesting how we did the fractal left this here. Came back, redeliver OTE, order block. Use this big stop hunt candle. I believe this is today. This was today. We did all this week, but we still didn't take the high. Then on SPX, we got the SMT. It's the last of it, probably for the week. We took Monday, so we got the Thursday. Consolidation Thursday. Bullish expansion. That's that weekly profile. Well, I probably opened up the actual. Yeah, I ain't have to do that. I think this is bigger. Basically the same delivery, but New York was slower. Not as powerful. And then here you can see we actually got the Monday. Then the monthly TGI had to scoot up because we just extended. So if we take this monthly range, this is the new TGIF, which kind of lines us up to basically the lower Monday. So, and tomorrow's the last day for that. Yep, new monthly candle starts. So we don't get it tomorrow, and we just know. But it's already super bullish, so we might not get it. Look how the stocks finished on SPY. Just chill. Okay. And the Qs, it's not as strong as the SPY. See how we got the retracement. It looks like it's been trying for longer. But with NVIDIA turning around, it could be a whole nother story. Kind of respecting this gap though. So if any kind of slowdown on NVIDIA, should be easier to sell. Just the engagement. So it's like open, going for the sale. It's like a small, basically a BE. Then went for a sale here. After we took out this. This was basically a break even here too. When they flipped and new day opening gap, I got in and took it here. So that's the executions for the day. Followed the plan. I put no on the framework in play. I was expecting a little lower, but gotta be nimble, be quick. And tomorrow looking for monthly TGIF. And that's basically it. Y'all have a good day. Peace.